One of the biggest myths is you need perfect credit to qualify for business funding. That, in fact, is actually not true. What you really need is, I would say, a structured credit report in order to qualify for funding with limited documentation. Let me go ahead and explain. So someone who has a 680 well-structured credit profile compared to somebody who has a 750 and not a structured credit profile, the person who has a 680 will likely get the funding with limited documentation because they've been able to prove on their credit report that they know how to manage debt, compared to the person who has a 700 credit score and has a thin profile. So the myth that we're going to break down again is that you don't need perfect credit in order to qualify for funding. What you need is a structured credit report, especially if you're not trying to provide bank statements and tax returns in order to get funding. How personal credit impacts business funding. So personal credit impacts business funding because if you are trying to get no documentation products for your business and you don't have the structured credit report, or let's just say you don't have anything on there, you're not going to be able to personally guarantee for business funding. 3 ways to reduce credit utilization fast for funding. So what you're going to do is you are going to get a personal loan. There are companies like Lightstream, Prosper, etc. And then what you want to do is after you get that personal loan, either pay off debt or you can transfer it in and open up a business bank account and make deposits. So then that way, once you get funding through your business bank account, whatever bank account that you use for business funding, you utilize that money to pay back your personal loan. And that's going to be the way that you can utilize and decrease your credit utilization. So you want to be following when you are applying online. 90% of users apply online when they're looking for funding and they don't have anyone to help them. They're just solely doing it by themselves. But you may be doing it all wrong. So let me go ahead and show you what order that you need to be following when you are applying for funding online. The first is going to be the pre-qualification. Again, we broke down pre-qualification is when you initiate the process to see how much you can be offered for funding. So usually some credit unions will provide an option for pre-qualification and you'll be able to see the amount for funding. You want to utilize this tool when you are applying online. Make sure you use the pre-qualification tool. Second is a soft pull. Anywhere that you are applying for funding, you always want to do a soft pull because the soft pull goes back to the pre-qualification tool where it won't affect your credit, okay? Third is you want to make sure that you're checking to see if they are new account sensitive. So new account sensitive meaning like if you are a non-credit member or new to their institution or don't have any sort of relationship with them, what are going to be the drawbacks from that? Last is looking at the scale of documentation. So no documentation, just mainly based off the stated income. Light documentation, meaning usually they're going to require bank statements. Full documentation, they're going to require bank statements, tax returns, business plan, and maybe even possible disclosures, as well as a questionnaire. Now that you know that, use all 4 of those steps when you are solely applying online. So I'm going to provide you the best funding option, specifically financing for your business, depending on where you're at. So if you are a new startup business owner, you don't have any revenue, credit is absolutely low, you need to be looking at micro CDFI loans, but mainly you want to be looking at accelerator programs like Civic, People Fund, minority programs. You need to be solely looking at accelerator programs first, CDIF programs, special purpose loan programs. They are specifically to help minority and disadvantaged communities with little consent when it comes to credit products. And last, I would say maybe fintech loans. So those are going to be the order in loans that you want to look for. This is from a financing perspective, not for money that you won't have to pay back. This is from a financing perspective, money that you will have to pay back, but the most help as possible. So let's recap it. If you are a new startup business owner with low revenue, absolutely no credit as well, you need to be looking at accelerator programs being your number 1, CDIF microloans being your number 2, special purpose loan programs being your number 3, small dollar loan programs being your number 4. I hope that helps.